Hi everybody, welcome back to Ox Talks. It is Thursday, December 21st, 2023. The video might be a bit shorter today. I've got to get out of here. I have a workout in about a half an hour and then a family Christmas gathering for some of the family this evening. Thanks for watching the videos. Please subscribe to the channel, like the videos, hit the bell notification, and share these with your family and friends. The economy is not what the mainstream will have you believe. We'll share a couple stories in a few minutes that is further indication of this reality. So the market was up again today. The cheerleaders were out saying that yesterday's big sell-off was just a little blip on the screen, nothing to worry about. So we'll see. Gold and silver had a really nice day today. I saw that. Gold is up pretty darn near close to $2,050 an ounce. So we're within about $25 again of getting through the all-time high. Couple of things I was working on today. Most importantly, I have a dispute. It's a partnership dispute. Two partners purchased some property a couple years ago to do a renovation, a rehab, and then list the property and sell it. One of the partners was going to be listing the property. They were going to reimburse for expenditures and then split profits. Well, a lot changed in the marketplace in terms of property values while the construction was underway and while it was being completed. The costs of renovation due to labor costs being higher, due to material costs being higher, harder to get labor, all that became more expensive to complete the project. So what happens then? You have tension forming between the joint venture partners. You have issues of reimbursements that have to be dealt with, six-figure numbers, multiple six-figure numbers. And meanwhile, you have a softening real estate market. So if you guys are considering going into partnership arrangements with friends or clients or God forbid, family members that have these kind of unknown variables, number one, from my perspective, you want to get a good business lawyer to lay out the structure of the joint venture, of the partnership, before you go into the venture, before the property is acquired, before costs are expended. Because what a good business lawyer will do is probably introduce concepts and ideas that the parties haven't thought about. A lot of times business people are just excited to get to the next level. They see the opportunity and that's great. And then, people say, well, lawyers are always deal killers. The reality is a good lawyer and someone who has both transactional experience and litigation experience can look at a deal and make suggestions to say, okay, what if? And our job, we're paid to ask the what if questions. What if there isn't a profit at the end of the road and the market drops? What if one side's expenditures exceed that was expected by the other partner? How's that going to be paid? How's it going to be reimbursed? Who is going to be listing the property? How you're going to agree on that? Is one of the partners going to be the listing agent or broker if they're licensed, or is it going to be listed through a third-party firm? All these things are very, very important. And even details in a regular contract, such as prevailing party attorney's fees. What if there's a dispute and you did your best to avoid a conflict, but it has come to that point? What is to happen? Does the property get sold and the proceeds get held in escrow? How do you arrive at a fair value for the property? Is one party allowed to determine fair value, or do you have to go and either have an agreement of both parties or an alternative appraisal to set that? All these kind of things normally, folks, are not properly set forth in the contract when parties don't have lawyers help to write them. And I'm sure I'll get some hate comments about, anti-lawyer comments, but you have to understand that there's a role for all types of professions in certain transactions. Certainly, business people are not always looking at it from the side of the what if, or if there's a dispute that arises. So anyway, trying to work this one out. and avoid the parties getting embattled in a whole bunch of litigation over this. Let me shift to a couple articles that I saw today that I thought were important. One is out of Market Watch, just came out, and it says economy still appears headed for a recession. U.S. leading index signals, and it says here are the numbers. The leading economic index declined 0.5% in November, falling for the 20th month in a row, and continued to signal a recession ahead, it says. Economists polled by the Wall Street Journal had forecast 0.5% drop, so it was in line in the leading index, a gauge of 10 indicators designed to show whether the economy is getting better or worse. It says the last time the index fell so many times in a row was during the Great Recession from the end of 2007 through 2009. Key details: 9 of the 10 indicators in the survey were flat or negative, it says, in November. The only one that was positive was, you guessed it, the stock market in light of the recent rally. It says, looking ahead, despite the economy's ongoing resilience, the Conference Board forecasts a short and shallow recession in the first half of 2024, said Justya Zabinski-Lamonica, Senior Manager of Business Cycle Indicators at the Conference Board. And it says, what was the market reaction? Well, the markets put on more gains today. Everything finished in the green. So you have a narrative from the economists and the indicators that is pointing to this recession. They say a shallow to mild. Let's see how that plays out. Now, shifting gears to the flip side, I thought this was a very interesting article I saw. I think it's been out for a few weeks here. It was based upon a TikTok video that was made. And this person who made this TikTok video, now it has 7 or 8 or 9 million views. I haven't seen it. I'm not on TikTok. But evidently, this person referred to the silent depression. Let me turn this screen off, sorry. Referred to the silent depression. And now you have basically say to look at what the people on Main Street are feeling, what the consumers are feeling is like a depression. And now you have the economists out. I should have given this video some interest because, of course, they're having to run out and say, no, come on, it's nothing like 1929, 1930. The quality of life is much better, opportunity's better, the economy's firing on all cylinders. So I find it interesting that this TikTok video has gotten the response and interest of economists that have rushed out to try to dispel this. So let me read it to you. It says, this is from CNBC yesterday. It says, one of TikTok's latest trends is coined the silent depression, aims to explain why Americans feel so bad about their own financial standing. It says, even when the economy is in good shape. Okay, that's CNBC. Once again, they toe the line that the economy is in good shape. It says the key expenses such as housing, transportation, and food account for an increasing share of the average American's take-home pay. That's what we're talking about, is the average American's take-home pay. And what are the people on Main Street, the working class people, what are they experiencing? What are they going through? Which appears to be completely detached from what you see happening with the upper wealthy percentage of the population and what's happening on Wall Street. It says the U.S. economy has remained remarkably strong, but affordability is worse than it ever has been, some social media users say, even when compared to the Great Depression. This is one of TikTok's latest trends, coined the silent depression, aims to explain how key expenses such as housing, transportation, and food account for an increasing share of the average American's take-home pay. It's harder to get by than it was during the worst economic period in this country's history, according to some TikTokers. So if you guys are on TikTok, I suppose you could key in silent depression and see what that video is all about. It says this person, I think it was Freddie. His name is Freddie Smith. I found an article also on Market Watch that addressed his post. And it says he says the point that I make in my video is that we are all facing a new kind of challenge today. It has now, the video has over 9 million views. It says people are working longer hours but keeping less of their money due to the high cost of housing, daycare, student loan, and student debt. So look, I mean, I haven't seen the video, but I think that's absolutely true. He was saying that, well, it's being dismissed as people just being lazy, not wanting to work. And he's saying, really, it goes beyond that. Sure, there's a portion of a segment of the population that really doesn't want to put the effort in, but that it goes beyond that. And I think that has a lot of veracity there. So again, I thought it was, if you guys have heard the term silent depression, a comment down below. Let me know what you think. I will leave it there today. Hope you got something out of the video. I know it's short. Let's see what happens tomorrow. Some news coming out in the morning that may impact the markets and definitely will potentially impact the price of the gold and silver spot prices. So have a great night, everybody. Get your workout in today. I'm going to go get mine done right now. I'll see all of you tomorrow. Bye.